All right, welcome. Thanks to the experts over at My Tax Accountant, we're diving into the one question every crypto holder in the UK is asking. How do you actually take your profits without giving a massive chunk to HMRC? We're going to get into the smart, legal ways to do just that for the 2025/26 tax year.
So, let's get one thing straight right from the start. No, there's no magic tax-free button. But, and this is the important bit, with a bit of know-how, you can legally slash what you owe. And sometimes you really can bring that bill down to zero. And look, this stuff is more important now than ever before. You know, the days of crypto being kinda under the radar, they are well and truly over. HMRC is getting data directly from major exchanges, and with even stricter rules coming in 2026, being prepared isn't just a good idea, it's absolutely essential. So here's our game plan. We'll start with the common crypto tax trap. Then we'll figure out what your tax bill actually looks like. After that, it's the fun part, simple and then some smarter ways to save cash. And finally, we'll cover how to stay in HMRC's good books and what your next steps should be. Let's jump in.
Right, so what is this trap I'm talking about? Well, it all kicks off the second you make what HMRC calls a disposal. Now that sounds super technical, but it's really not. A disposal isn't just selling your crypto for pounds. It's also swapping one coin for another or, even using your crypto to buy a pizza. Any of those things can trigger a tax event.
And that tax is called capital gains tax, or CGT. Now, if you remember one thing from this whole guide, make it this. You are not taxed on the total amount you cash out. You are only, and I mean only, taxed on the profit, the gain you made. That difference is everything. Okay, let's get into the nitty-gritty and break down the numbers that actually matter for this tax year. Getting your head around these is the bedrock for all the strategies we're about to talk about. Okay, so the rate you pay on your crypto gains is tied directly to your total income for the year from all sources. As you can see here, if your salary plus your crypto profits keeps you in the basic rate band, you'll pay a pretty reasonable 10% tax on those gains. But if those profits push you into the higher or additional rate bands, that tax rate doubles to 20%. And a quick pro tip for our viewers in Scotland, remember your income tax bands are different, which could mean a large gain pushes you into a higher bracket a bit quicker. Now, here is your first and most powerful tool for saving tax. It's the Capital Gains Tax Annual Allowance. For the 2025/26 tax year, the first £3,000 of profit you make is completely 100% tax-free. Think of it as your free pass. But, and this is a big but, here's why planning has become so incredibly important. Just look at how much this tax-free allowance has been slashed. A couple of years back, it was over 12 grand. Now it's just £3,000, and it's going to be frozen there until at least 2028. That squeeze makes every single strategy we talk about next even more vital.
Right, so with those numbers in mind, how do we actually save some money? Let's start with a few simple but really powerful strategies that, honestly, every crypto investor in the UK should know about. First up, timing is literally everything. Because your tax rate depends on your total income, if you can, try to sell in a year when you're earning less. Maybe you're between contracts, taking a career break, whatever. We had an IT contractor from Leeds who saved 2,000 quid in tax just by waiting a few weeks for a big project to finish. And here's a great pro tip. If you've got a large amount to sell, consider splitting it. Sell some at the end of March and the rest in early April. That way, you use 2 years' worth of tax-free allowances for one big withdrawal. Now, here's a strategy that can turn a bad trade into a good thing for your tax bud. It's called tax loss harvesting, and it's all about finding the silver lining. Let's be real. We've all got some coins in our portfolio that didn't quite go to the moon. By selling an asset that's currently down, you officially realize that loss for tax purposes. You can then use that loss to cancel out the gains you've made on your winners, which brings down your total taxable profit.
And just look at the difference this makes in the real world. We had a graphic designer based in London. She was looking at a £12,000 gain on her Bitcoin, but she also had a £7,000 loss sitting on another coin. By selling that losing position, she chopped her taxable gain from £12,000 right down to £5,000. After using her £3,000 allowance, she only paid tax on $2 grand. That's a huge saving.
Okay, so those are the fundamentals everyone should be using. Now let's dive into some more advanced plays for those with bigger portfolios or specific circumstances. Honestly, these can be absolute game changers.
I'm just going to leave this question up for a second. Seriously, think about it. If your answer is yes, then you have unlocked what is probably the single most powerful and simplest tax-saving tool for crypto in the UK. So, here's how it works.
You can gift crypto to your spouse or civil partner, and there is no capital gains tax on that transfer. It's a tax-free gift. Your partner now owns that crypto and can then sell it using their own £3,000 tax-free allowance. Instantly, you've doubled your household's tax-free limit to £6,000. Just look at Tom, a plumber from Bristol. He had a $10,000 gain. He gifted half to his wife, they both used their allowances, and together they paid absolutely zero tax.
But, and this is super important, you have to be able to prove it's a genuine gift, not just a scheme to avoid tax. The cleanest way to do this is to have a clear record of the transaction, a transfer from your crypto wallet to theirs. That paperwork is absolutely vital if HMRC ever comes knocking. Okay, we've talked a lot about saving tax, which is great, but all of these strategies rely on a foundation of solid compliance. Getting this part wrong can be really painful. So stay with me. This next part is crucial for avoiding some very costly penalties. Now, this is a massive trip hazard for so many people. Not all the money you make from crypto is a capital gain. Things like staking rewards, airdrops, maybe some mining, that's often classed as income, and that means it's subject to income tax rates, which can be way higher at 20, 40, or even 45%. The first grand might be tax-free under the trading allowance, but anything over that is taxable. Priya's story is the perfect warning. She is a freelance coder whose staking rewards pushed her total income into the higher tax band, meaning she paid 40% tax on them. Ouch.
And if you get your tax return wrong through what HMRC decides is carelessness, the penalties can be really steep. We're talking up to 30% of the tax that you owe on top of the tax itself. It's a very big financial reason to get your ducks in a row from day one.
So, here's your simple checklist to stay safe. Number 1, track everything. I mean every buy, sell, and swap. Number 2, keep detailed records of the dates and the value in pound sterling on those dates, plus any fees. Number 3, don't forget to report your losses. You've got 4 years to do it, and they can be used to offset future gains. And number 4, whatever you do not miss that 31st of January deadline for your self-assessment tax return.
Phew. Okay, we have covered a huge amount of ground. From the basic rules of the game to some really clever strategies, you basically have the playbook now. So the final, most important step is turning all this knowledge into action.
Look, let's be honest. This stuff is complicated. The rules are always changing, and everyone's financial picture is unique. Getting professional advice isn't a sign of failure. It's a strategic investment. It's about making sure you're fully compliant and that you're not paying a single penny more in tax than you legally have to.
So if you want advice that's tailored specifically to you and your crypto portfolio, the team at My Tax Accountant are the people to speak to. You can get in touch with them directly on WhatsApp or by phone at 07854 255 375. Or you can drop them an email at info@mytaxaccountant.co.uk. And of course, for more guides just like this one, make sure you hit that subscribe button on the channel.
So I'll leave you with this one last thought. You've got the knowledge now. You know the strategies. So what is the one single thing you're going to do today to start protecting your hard-earned crypto profits? Maybe it's just downloading your transaction history, or maybe it's scheduling that call. Whatever it is, the best time to start is right now. Thanks for watching.